So analysts have been screaming for quite a while for the past few years about the stock market that is going to crash any day now. And if you take a look at Google, take a look at some of the articles that were written. I mean, you have January of 2014, stock market is going to crash. 2014, stock market is going to crash. 2015, the stock market will crash in 2016. Stock market will crash in 2016. And so on. And now we have a bunch of analysts screaming that the stock market is going to crash in 2017. And eventually, when the stock market does crash, you're going to be having a lot of analysts pointing their finger at themselves and saying, oh, I was right. I guessed that the stock market was going to crash, and therefore everybody should follow me and my news now. But in reality, nobody really knows when the stock market is going to crash. People are guessing, and it doesn't really take a genius to look at the graph and see that, yeah, at some point the stock market will probably crash. I mean, if you take a look at it, it's going up fairly significantly right now, so eventually it will probably crash because this type of growth is not really sustainable for, for decades. But whether or not the stock market is going to crash tomorrow, whether or not it's going to crash a year from now or 5 years from now, nobody really knows that. So the question then becomes, if you want to preserve some of your gains, if you've held stocks since 2009, 2010, and you had some really nice returns on a lot of those stocks, if you want to preserve some of those gains, what type of stocks should you diversify into? If you want to take some of your more risky investments and diversify them into some safer investments so that they don't get wiped out whenever a stock market crash could potentially happen, what should you do? Well, whenever there's a recession in the market, whenever the market crashes, generally you want to make a transition into companies that sell inferior goods. So inferior goods in economics are goods that people buy whenever they have less income. So a common example that is used is food-wise. If you had, let's say, if you made $1 million a year, you would probably not cook for yourself unless you like cooking for yourself, but most people don't cook for themselves whenever they make $1 million a year. They will go out to a restaurant, they will buy something, they will order food. They don't really cook for themselves. Now, if you don't have a lot of money, if you're struggling financially, generally you will cook for yourself or you will buy food that is very cheap and very easy to make. So inferior goods right here, in case you want to read this. So stuff like ramen, stuff like Mcdonald's, it tends to get bought a little bit more in a recession because people have less money to spend. And whenever people have less money to spend, if they don't have time to cook for themselves, they would generally buy cheaper foods. And ramen noodles, they still taste pretty good, but if you had the choice between ramen and a steak, you would probably take the steak the majority of the time. So you're looking for stocks that generally deal with goods that people are either going to buy in a recession, or you're looking for goods that people are not really going to cut on. So here's some stocks that will generally do well. You can try looking up others based off of this information, but one company that's done fairly well and is probably going to do really, really well in the foreseeable future is Church & Dwight. So these guys sell American household products, and let me zoom in a little bit. And you're probably familiar with a lot of these. These are quite common products, and if there is a recession, I mean, you still have to wash your clothes in a recession. You're not going to stop washing your clothes unless you're completely broke and homeless, but most people keep on washing their clothes. Most people still buy baking soda for cooking and cleaning and stuff like that. So these guys did fairly well during the last recession, and they'll probably do really well in the next recession. And these guys pay a dividend, so if at some point you take some of your money from your riskier stocks and put them into these guys, you'll still be fine. Now, next on the list is waste management. So waste management, same thing. Companies that deal with waste management, companies that deal with bugs, termites, things like that. Whether the bank owns your house or you own your house, generally it's in your best interest, it's in the bank's best interest to make sure that you don't have termites. Because if termites are in your home, you want to get rid of them as soon as possible. Otherwise, your house value will go down very, very quickly. So companies like this, waste management, same thing. Even in a recession, people still need somebody to treat their waste. And if you invest in a waste management company and then hold out through a recession, you'll be doing fairly fine. Compared to if you're probably holding a lot of tech companies, those would probably fall, heavier, more, other than something like this. And the last company, oh yeah, by the way, a lot of the companies that people will often talk about are retail stores like Walmart and some other stores that sell things really, really cheaply. But in terms of investing into retail stores, I don't know if I completely agree with that, because you have Amazon right now, and Amazon is out competing a lot of retailers. So Walmart will probably stick around, but there are products that are cheaper just to buy on Amazon than they are to buy at Walmart. So I don't know if it's a good idea to invest into retailers right now. Times are changing, and it might not be a very good idea. But anyways, last on the list is McDonald's. Even in a recession, people are still going to want to eat fatty foods. People like food that tastes well, and it's one of the simple pleasures in life. And a lot of people will still want to eat, tasty food. And even though McDonald's is lower quality and people generally look at it at, not as healthy, in a recession, people will still eat at McDonald's because, if you compare McDonald's prices to a little bit of a fancier restaurant or a fast food chain, McDonald's, I mean, in terms of pricing, they beat out pretty much everybody else. So if you hold McDonald's during a recession, you'll probably still be fine. You'll be getting a decent dividend, and you wouldn't have much to worry about if a recession did take place. So hopefully this helps. If it does, leave a like, and hopefully everything made sense. If not, leave a comment, and I will do my best to clarify.